on top of that, you need to make sure that that bonus product gives you indexes like the S&P 500 with high enough renewal rates every single year that make it worth it. Hey guys, I am John Stevenson, the Guaranteed Retirement Guy. Thanks for tuning in today. I want to talk to you about growth annuities and how I actually met with someone just recently, and he has about $4 million in annuities. They're just growth. He wasn't looking for income, but he got sold these from a friend of a friend. So he was referred to them, and I don't know how much this guy knew about annuities that sold it to him, but he just put them in indexes that were, they were indexes that were basically back tested. So, and I've talked about this in past videos. You can't put money into contracts with indexes that don't have any track record. And this guy didn't know. I mean, he was trusting the advice of this advisor. And this advisor, I don't know if he knew either, especially if he's a AUM advisor, someone who manages his money and does annuities on the side. Then a lot of those guys do not know the ins and outs of these annuity contracts. And in my opinion, probably should be referring them to someone like myself who does it full time. But what happened was they put his money into, and this was about 3 years ago, but they put him into these, okay indexes. But I mean, we've seen really good market growth, in the last 3 years. So you would think that he would have gotten some growth. And of course, with annuities, even growth annuities, they're not going to give you all of the index growth, which is normal. What he was getting though, the returns were like 1%, maybe 2%. Like, it was ridiculous. You're not even keeping up with inflation. And they're good companies, like super good companies, like companies that I use for income, not for growth. Companies like F&G, Athene, Allianz, awesome companies. They're top of their game for particular products. But when you're looking for indexes and you're looking for high renewal rates, not so much. So you have to make sure you pick the right carrier. You have to pick the right index, which in my opinion, it should be the S&P index, okay? NASDAQ. PIMCO's actually been doing pretty decent. I actually have some clients with Allianz and they have a PIMCO index and they actually are doing really, really well. So some people say, oh, PIMCO's not great. I've seen like 7 and 8% growth on those just last year. Not like that's gonna happen every year, but it's still nice to see that some of those indexes that are outside of the S&P 500 and the NASDAQ, it's nice to see them do well. Some of the BlackRock does well, the UBS does well too. But for the most part, if you're looking for solid growth, and of course market protection, pick the indexes that are known to do well, and then pick the company who is known to keep the renewal rates high. And you might be asking, what is a renewal rate? A renewal rate is the cap that they are capping on your growth and also the participation rate. They might only be giving you 50% of the S&P 500's earnings. Or they might be giving you all of it, but then capping it at 10%, okay? But then you have to think about what happens after the first anniversary or the second anniversary. Do they lower those caps by half or by more than that? What if it's a 10% cap and then they lower it to a 3% cap? That's what a lot of these carriers are doing, and so they call that a teaser rate in the beginning. And then you illustrate these illustrations for your clients, sell them a policy, make your commission, and then your clients never want to talk to you again because they're so upset that they got suckered into this product and they didn't get any growth. So it's just because you've got the wrong products. That's all it is. First, you have to just make sure you're talking to someone who's an expert, someone who does this day and night. So if you want to talk to me, book a call. There's a link below this video. Go to my website. If you want to look at other annuities, income-based annuities or MYGAs, then you'll see those on my website in real time. You can book a call there too. It's johnstevenson.com. But if you want to look at fixed index annuities just for growth, okay, just for growth and market protection, then you need to book a call, okay? Because there's so many ins and outs that you need to think about. And I'll just tell you, some of these companies, Delaware Life, Global Atlantic, National Life Group, okay, just to name a few. These are some of the top ones that I know just from experience and watching over the last decade or so. They have high renewal rates. Some of them are above 88%, some of them above 99%. The one that's 88%, they have 70,000 policies. 88% of them renew at the current rate that they got in the beginning or higher. That's really important to know, okay? And this is at the S&P 500 index. That's also important to know. There's just things to think about. When you want growth, that's what you need to be looking at as far as high renewal rates. If you want just a rate lock, where they're not allowed to lower the rate. You can go for a lower one, like 8%, like Mass Mutual or Delaware has one of them as well. Global Atlantic, I believe, has one, but it limits your upside on the good years. So you just have to remember those. But they do have rate locks that you can put in. But for this particular instance, he has to have a bonus. So I'm going to be showing him some bonuses that are 10%, and one of them is going to be 14% next month, which means you put $1 million in there, you put $140,000 in there. Now remember, with any bonus product, they are going to limit some of your earnings after that because they want their bonus back, and that's how they get it back. That's just how it is in the real world. When you want to do a replacement, either you need to have no surrender charges and you can move into anything you want, or if you do, you need to make sure it is a bonus product. But then on top of that, you need to make sure that bonus product gives you indexes like the S&P 500 with high enough renewal rates every single year that make it worth it. So that when you and I get on a call or an annual review in 3 or 4 years from now, and you're like, John, thank you so much, instead of, oh, this is the worst thing ever, right? You never should have put this in, right? And a lot of people are frustrated with their advisors because they'll put them in things that don't work. So anyways, hope that helps. I just kind of want to educate on this because there are so many things to know about how annuities work. Annuities are phenomenal, but you have to set up the contract correctly. You have to work with someone who knows how to do it. So if that's me, great. If it's someone else, just make sure they're an expert, okay? Anyways, appreciate you listening. I really do. It's just, I love being out here. I'm up in Horse Thief Canyon. It's actually named this because cattle rustlers back in the day, 100 years ago, they would steal immigrants' horses, drive them up the mountain on one side, and then on this side, coming down, going down here, you can see the creek here, but going down this mountain over that hill, they would then meet some other immigrants and sell them horses. So anyways, that's why it's called that. A lot of crazy stuff in the Wild Wild West, right? Anyways, thanks again for watching. I really appreciate it. If you like the videos, make sure you subscribe, share it, comment below. And again, if you want to book a call, there's a link below this video. There's a link on my website, and we'll talk to you then. Thanks a lot. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.